Today's July 28th, and we've got a new bill from Congress to go through, but a quick reminder that the coupon on Building Your Wealth does expire today. This will be the last chance to get the best pricing on the programs on Building Your Wealth in the real estate market, in the stock market, self-employed as a real estate agent, or making YouTube content, or as a do-it-yourself rental renovator and property manager. Links down below. Hey everyone, me Kevin here. Well, Congress is back at it again with another 725-page spending bill. This one is called the Inflation Relief Act of 2022, or Inflation Reduction Act of 2022, and it proposes $433 billion in spending, a far cry from the $3.5 billion Build Back Better plan that Joe Biden was going for. It does come on the heels of the CHIPS bill passing. That's the $52 billion CHIPS bill that just passed the Senate. And while this bill is not passed yet, it does have Manchin support to get through budget reconciliation. It doesn't mean it's going to pass, but let's get into some of the weeds to see exactly what this bill does and what this bill doesn't do. All right, folks, here are some of the details. So, first, $433 billion in spending, $300 billion in deficit reduction, and I'll show you some of the ways they're actually thinking about getting revenue into this. They do think they're going to get $739 billion in revenue. They're branding this as something that's going to stabilize prices by reducing the cost of energy-related investments in electric vehicles. We'll talk about those along with new tax credits for everyday folks. Now, they're also going to be increasing, this is one of the first big measures, so getting into the number one here, they're going to be increasing the corporate minimum tax to 15% on companies with at least $1 billion of revenue. That's expected to raise $313 billion of tax revenue until, of course, those companies find new loopholes. They're going to increase the budget for the Internal Revenue Service, something that is expected to raise $124 billion by auditing more Americans. Number three, they're going to tax carried interest. If you know what that is, you know. It's $14 billion, or at least they're expecting to raise $14 billion from that. Really, this is for like venture capitalists or syndications or investment managers who manage other people's money. They also did not include any kind of changes to the SALT tax deduction. No expansion here. No taxes on stock buybacks and no millionaire tax. We did, however, get a $369 billion investment that's proposed to lower energy costs, increase clean production, and reduce carbon emissions by 40% by 2030. And what I've done, because I'm going to link the bill down below, is I've put little page numbers here. So if any part you get confused by some of these, don't worry, it's not the easiest thing to read. I get confused too, so you can always fact check me by looking at the bill directly. First, I noticed that there are changes in definition from qualified plug-in electric drive motor to clean vehicles, which is really interesting because presumably that includes hybrids as well and not just like all electric vehicles, which in my opinion is kind of like the legacy auto manufacturers kind of saying like, hey, can we include the good old hybrids as well? Who knows? But anyway, I thought that was really interesting. Of course, I expect it will also include hydrogen fuel cells and such. We also see the elimination of the limit of number of vehicles eligible for the credit. There used to be a limit on like the first 200,000 vehicles that would be eligible for the credit, and then that eligibility went away. That is being lifted by this bill. To qualify, qualifying vehicles must have 40% of their battery either, quote, extracted or processed in any country in which the U.S. has a free trade agreement, or is recycled in North America if it's placed in service within these timeframes. So basically, in simple speak here, U.S., Mexico, or Canada produced vehicles and batteries, as long as 40% of the battery is produced in the U.S., Canada, Mexico, or other free trade countries in 2020 or by 2024, they qualify for the credit. 50% by 2020 or throughout 2024, 60% throughout 2025, 70% throughout 2026 in order to qualify for this. So it does sort of harken to some domestic manufacturing. 1 credit per VIN, so unfortunately for vehicle flippers, and I kind of had a little feeling myself too. I'm like, can I just like buy and sell a bunch of these and milk a bunch of these credits? Nope. 1 credit per vehicle VIN number, vehicle identification number. And for individuals, there is a $7,500 credit. as long as the vehicle matches this description out here in terms of being manufactured mostly in the United States, Mexico, or Canada, and you'll qualify for $7,500 as a tax credit if your modified adjusted gross income is under $300,000 for a joint household, $225,000 for a head of household, and $150,000 for single individuals. There are limits on the value of the vehicles as well. The limits start at, well, the limits are $80,000 for vans, $80,000 for SUVs, $80,000 for pickups, and $55,000 for other vehicles. Previously owned vehicles will only qualify for $4,000 or 30%, whichever is lower. So, for example, a $3,000 vehicle would only qualify for about $900. Used vehicles do need to be under $25,000 and weigh less than 14,000 pounds. Now, this gets tricky, the qualified commercial clean vehicle part. And it gets tricky because there are a lot of Tesla fanboys and fangirls out there who are like, oh my gosh, Tesla semi-trucks are going to get a full $40,000. All right, let's clear this up a little bit, okay? So here's what the law says. You'll get a 30% credit on non-diesel and non-gas commercial vehicles up to $7,500 if it's under $14,000, or 14,000 pounds. This matches the individual's $7,500, so both commercial and individuals get that $7,500 as long as the vehicles qualify and they're under 14,000 pounds. But you get $40,000 if it's over 14,000 pounds. However, these are actually the limits. The limit is $7,500. The limit is $40,000. And the limit is based on the smaller number of either what you pay or the incremental cost of the vehicle, which is the difference between what you're buying and a comparable vehicle with comparable use that's gas or diesel. Let's give you an example. If a Tesla semi-truck costs $250,000 and a MAN semi-truck costs $200,000, then you would get 30% on the difference as long as they're deemed to be comparable vehicles, which I think we would be hard pressed as Tesla fan people to argue that, you know, a semi-truck that's diesel is somehow vastly different from the use of a Tesla semi-truck, right? But anyway, you'd get 30% on the $50K or 30% on $250K, whichever is less, which in this case, the lesser amount would be $15,000. To really get the full $40,000, the electric version would have to cost $120,000 more than the equivalent gas or diesel version. Also, it's worth noting that clean diesel and gas vehicles that are more expensive than non-clean diesel and non-gas vehicles will qualify for a 15% tax credit as well, which is very interesting because that kind of means that gas and diesel vehicles could be getting 15% as a tax credit. That was a little bit complicated, but hopefully that makes sense. You can rewind if it didn't. There's also up to a $100,000 credit for basically installing EV charging stations, fueling stations, which I thought was interesting. That'll last through December 32, along with all these other benefits that'll last all the way up through December 2032. There's an extension of the geothermal and solar credits through January 1st, 2025, which will be cheered by the solar industry. Then, getting away from energy again, we do have the Affordable Care Act extension, $64 billion investment, Medicare being allowed to negotiate drug prices, which is expected to raise $288 billion. The Senate parliamentarian does still have to go through this and agree that this bill belongs in the budget reconciliation process. She might end up slicing pieces out of this, and it will require Kirsten Sinema being on board, and she says so far that she still has to review the text. Regarding responses, so far Mitch McConnell has responded saying that Democrats have already crushed American families with historic inflation. Now they want to pile on giant tax hikes that will hammer workers and kill many thousands of American jobs. First, they killed your family's budget. Now they want to kill your job too. Well, folks, there you have it. The Inflation Reduction Act of 2022. Thanks so much for watching, and we'll see you in the next one.